Welcome to Alpha Wolf's Den. It's here that we seek enlightenment. Alpha Wolf Trading recognizes that the most successful companies in the world at one point had no earnings. There's a lot more to a company than just its earnings report. That's why here at Alpha Wolf's Den, we interview executive teams. We want to get to know management. We want to understand the vision, the mission, the strategic drivers, the plan. We want to separate fact from fluff. This is not a paid for promotion interview. This is solely wanting to know the company's vision, mission, their critical success factors, their strengths, their weaknesses, their opportunities, and the threats. We want to know the long-term objective and the tactical initiatives that leadership plans to implement to achieve success. We want to know about the company's debt, the cap structure, what it's going to take for them to become self-sustaining and stop burning through cash. We want to know management's previous failures, challenges, hurdles, how they overcame them, or what they learned that they can apply in their current role. We're trying to identify the risk and the reward. And oftentimes, it's strong leadership that makes the difference between success and failure. Here at Alpha Wolf Trading, we are looking for the hidden gems. And I hope you enjoy this interview because this is one of those companies that I think could be a hidden gem. Please understand that this is for educational and entertainment purposes only. This is not financial advice, and I am not a financial advisor. Any investment that you decide to make in any security should be based upon your own due diligence and opinion. Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview. And this one's pretty exciting for me because I've been following the story since there was a management change and I met with management. My first takeaway was that this is a no-nonsense leader that is taking over this company. And he's got a background of doing this more than once. So it's DUOT Tech, and the symbol is DUOT. And Chuck, why don't you introduce yourself and tell us a little bit about your background? Thank you for coming in, by the way.
Yeah, sure. Tim, thanks for having me. Again, I was telling my staff here, I enjoy our sessions that we have and what you're doing. So thanks. I'm Chuck Ferry. I'm the CEO for DUOT Technologies. As Tim said, we're publicly traded. We are a very small but mighty company here based out of Jacksonville, Florida. A little bit about myself. I'm probably doesn't have the normal background perhaps of a CEO, but I'll tell you a little bit about myself. So I joined the Army when I was 17 years old as a private in an infantry unit. I went to Germany between the ages of 17 and 19. I ended up getting myself through college using the money that the Army gave me. I eventually got commissioned as a Army infantry lieutenant. I then served in the 10th Mountain Division, where as a company executive officer, I served in the Battle of Mogadishu, otherwise depicted in the Battle of Black Hawk Down. I eventually was promoted to captain, where I served as a rifle company commander in the 82nd Airborne Division. And then I went on to serve in 1st Ranger Battalion. I was promoted to major, where I then became the operations officer for 3rd Ranger Battalion. That's when the war started here, this most current war. After 9/11, about a month later, I parachuted into Afghanistan, second in command of that. And then between about 2001 to 2005, as a major and lieutenant colonel, served in a number of Ranger outfits, special operations outfits, serving in both Afghanistan and Iraq, doing classified operations on behalf of our nation. I was then promoted again to lieutenant colonel, and I got to come out of that. I took a regular infantry rifle battalion back into Iraq in 2006 during the surge there. For 16 months, we fought in Ramadi, Iraq, in the Anbar province. After that 16-month tour, I came back in 2008 and started deciding that perhaps I might look for another profession. So after about, I accrued about 26 years in the Army, enlisted man, NCO, and officer, got to lead and be a staff officer for many different, from small, large organizations, really all the way from the squad level to the task force level. I decided that I would try my hand at this thing called business. I had no idea what I was going to do, but in 2009, I retired from the military, and I took a job with Lockheed Martin. I was just happy to not be deployed. I had a nice little cube there in Colorado Springs. And after about 2 or 3 months, I started getting bored. And I started looking around saying, who's in charge of this outfit, and what the hell are they doing? And anyway, I stayed with Lockheed Martin for about a year. I was mostly doing proposal and business development for Lockheed Martin, again, back for contracts that they were trying to win in Iraq and Afghanistan. So it was a good learning experience. And one of the lessons that I learned, and kind of in a hard way, to your point, lessons learned the hard way, is that I didn't know a lick about finance. Absolutely nothing about finance. I knew how to lead organizations, but I couldn't read a spreadsheet to save your life. And one day we're doing this big, huge proposal, and I was the lead technical writer for this like $500 million proposal we were doing for Iraq or Afghanistan. And all these real smart guys in suits, that they were the money guys, came in and said, "Okay, we're going to go in here and we're going to talk about pricing. Chuck, you can stay out here. We don't need you for this meeting." I'm like, "Well, wait a minute. I should be a part of this. Like, the adults are going to go in and talk about, what we're going to do." So that was a hard lesson for me to learn. And what I decided right there is like, dang it, I'm going to learn this finance part of the business, and I'm going to come back and I'm going to run this outfit. So after that, I left not too long after that. I did a little bit of consulting work, but then I took a job with a company called Arma Global, real small company. We had about 80 employees at the time, and we were in the defense contracting space, making about $20 million a year. This was in 2010. And the owners of the company thought that I should be their operations officer. And I looked at them like, "Why on earth do you think I'm qualified to be your operating officer?" They said, "Trust us, just come, you'll be fine." So that business was primarily in the business. We procured aviation spare parts for the helicopter fleet in Afghanistan, which no longer exists. But at the time it did. It was a pretty good gig. And then the owners there wanted to get into the IT professional services and engineering business, servicing U.S. Special Operations Command and other classified customers. So I joined that company, and between 2010 and 2015, 16 or so, we grew from 80 employees to about 1,200, and we grew from a revenue of about $20 million, $30 million to well over $200 million a year. And we began to become a very, very attractive target for companies like Lockheed Martin and General Dynamics and other large companies. And eventually the three owners transacted with General Dynamics. I remained behind as the general manager of a wholly owned subsidiary in General Dynamics. I lasted about 18 to 20 months afterwards, and decided that I would try my hand somewhere else because I didn't really like being in a large company. It just wasn't my thing. So I left there and actually helped my former owners kind of stand up a mini little private equity group where we're going to help small businesses. It was kind of like Shark Tank for about 6 or 8 months. It was interesting. But then I got recruited to be the chief operating officer and president for a company called APR Energy up here in Jacksonville, Florida in 2016. And that's how I now live here in Jacksonville. Very interesting company, completely different industry. So we built, company was, when I joined, around $250 million top line revenue. It had just come from being delisted on the London Stock Exchange. It had just been taken private. And it was in a pretty bad situation. The chairman and CEO, John Campion, recruited me because he said, Chuck, look, I need a special operations guy that understands business to help me turn the business around. And I'm like, okay, fine, I'll help you do that. So we took that company initially first as a COO and president, and through 2017 to 2018, we embarked upon a turnaround. We operated power plants all around the world. We were about we eventually pushed the revenues up above well above $300 million. When I joined the company, we had a debt line of about $500 million that we pushed down to about 300. And by the time we got into 2019, my chairman unfortunately had come down with leukemia, and he was grooming me to be the CEO anyway, but that kind of accelerated that process. So I became the CEO of that company in 2019, and through 2019 to 2020, we had probably one of the best years the company had in its history over the last 10 or 15 years. Again, that was a real team effort. We built this terrific team that could move and build power plants faster than anybody in the world, competing with the likes of General Electric and Siemens and Mitsubishi and such. Early 2020, the company, which was owned by private equity, we had a 70% equity holder, decided that he wanted to sell. We did go through a transaction again, and not long afterwards, I decided that the new owners of the company were not folks that I really wanted to work for. I'll just leave it at that. And so I left that in 2020. Anyway, so I took about a break, about five months or so, and I came to. I got kind of a lead that this little company, DUOT here in Jacksonville, needed a CEO, and I came in and got interviewed for it, and here I am.
Okay, so I don't know about anybody else, but I think that's a pretty astonishing career. What's interesting though is my stepfather, retired from Lockheed Martin. He was there for
great company, but it just
40 something plus years. I mean, he wasn't there the whole time. Actually, he was with Ford Motor Company. Then he got transferred to Ford Aerospace. Ford Aerospace was then bought out by Lockheed Martin, and that's right. How that was his path to Lockheed. And then he finished out his career there. So yeah. Pretty interesting. I mean, amazing company, Lockheed Martin, right? I mean, that is one big, powerful company right there.
I'm pretty sure if they're not the largest, they are certainly one of the largest, most sophisticated defense contractors on the planet. That's for sure.
But it sounds to me you personally really love a good challenge, right? That's why you get bored, right?
Well, sometimes people ask me, well, Chuck, it sounds like you've done business turnarounds before. And I'm like, yes, but a lot of times in the Army, I've led many different organizations at different levels. And, I remember I was so thrilled I was going to get to go into command a rifle company in the 82nd Airborne Division in the brigade commander, very experienced, full colonel. he says, Chuck, guess what? I'm like, yes, sir. You're going into command next week. Oh, he says, you're going into command. I'm like, excellent. I said, how soon will it be? Well, it's going to be next week. I'm like, next week? That was really fast, right? And he goes, guess which company it's going to be? And I said, the one that just did the worst on this big exercise that we just went through. And he's like, exactly. I want you to go down there. You got 90 days to fix that place, and I'm coming down to check you out. So I'm becoming a repeat offender on turning companies around. I enjoy it. It's fun. And it keeps, it's exciting,
So let me ask you a question from a strategic point of view. When you're looking at a company or anything that you're looking at turning around, what do you think the key elements are to being successful at doing that?
I think first and foremost is understanding the problem set is for me. So before you make any assumptions about, is the company good, bad, are the people in the company good or bad, is the guy you're replacing good or bad, is just understanding the problem set.
The pain points, right?
Yeah. So for me, I kind of have a routine now in the business world of doing this. Is like, okay, well, all right, what business or what industry is this company in? Okay, what does that market actually look like? What are the market dynamics in terms of what's the technology that's being used or that's coming into play? What are the what's the total addressable market? How easy is it to sell? What it is that this company actually does. If in this case for Duostech, the potential to kind of transform the rail industry and other industries is so darn high. I'm like, okay, well, why aren't they doing well? And so you kind of start going down through that analysis, and you kind of come to a conclusion like, okay, company's in a good spot. It probably just needs a combination of I'll say some strategic guidance, just flat out, just maybe some better leadership or different leadership in this case, maybe. It may already have some good people inside that aren't being allowed to operate maybe to their maximum potential. And there's probably some people that need to be swapped out. You need to bring some new blood in and create a set of excitement, but also a sense of mission, of purpose, of process that can actually be followed. And a determination that, look, we're going to turn this outfit around and take advantage of the opportunity that we have in the market. So those are kind of the things that I look at. One of the lessons I've learned is that sometimes, and it comes in a bad way from my Army experience, you can turn a bad Army unit around. I know this sounds crazy, in about 90 to 180 days. I know that sounds crazy, but you can do it, right? Especially a smaller like rifle company or battalion. In business, it takes a little bit longer. It just takes a little bit longer. And so I've had to learn to be patient. You got to be patient with it, and you got to stay at it.
Were the other two companies that you got involved in and turned around? So the one was delisted, right? So, but what about the one prior to that? Was that a publicly traded company?
No, that first one that I was with, Arma Global, was actually a pretty good outfit, actually. Just it was really, really small. So again, I got the opportunity to kind of go in a kind of a good, we kind of had good bones to start with and really blow that company up really fast. This other company with APR Energy was about to go under, and we really, really, truly had to turn that business around. It took a good solid 2 years to really begin to feel that turnaround. But by the time we got through the 2.5 year mark, now we could really see the benefits of what we were doing.
So this is your first. So correct me if I'm wrong, then. But this is your first foray as a CEO of a publicly traded company, right?
That is correct. You and I have talked about that before. So this is not my first leadership gig or CEO gig, but it's my first one as a public company CEO, and I have surely learned some interesting, some more good lessons.
Yeah.
Some of them the hard way, but I've got a good, my CFO, he's been a good steady hand. He's been with public companies for a good part of his life. And so he's been a terrific instructor for me.
Yeah. So, I got to tell you, so since I met you the first time, and I didn't know anything about this company. And it was, I love turnaround stories. I love turnaround stories. I'm an underdog guy to begin with. I'm a Cleveland Browns fan. So, I mean, that tells you everything right there, right? So I'm always rooting for the underdog. It hasn't worked for me in football, but I've done a pretty good job in business. And
it will eventually.
When I met you, I said, this is a guy that, very clear vision and natural leader is the takeaway that I had. And, I really wanted to make sure I paid attention to the story and followed it. And I think I bought shares. I think we might have been right in front of you. I'm not sure, but
yeah, you did. We had a great conversation. You pulled out your iPad and you. I wrote that down, but it's kind of cool, actually.
Because I went, to me, and this is something that I hear over and over and over again through the interviews that I do. And there's a couple of holding companies that actually that's what they are. They're investors. They get involved with companies. The one company owns 68 different companies, right? And the conversation that we had was, how do you identify these opportunities, and then what's the most important element? That is it the service? Is it the product? Or is it management? Is it the leadership? And they've had to shut companies down that weren't, they would have post-mortem meetings as to why they had to shut that company down. 90% of the time, it was leadership. They had the wrong people in place leading the company. And to me, that is the biggest element, right? And that's why I always want to meet with management, because I want to understand who they are and what their vision is, and what's the plan to get there. What are the tactical initiatives, and how are you going to execute them? Right? I mean, how can we follow along and say, okay, they're doing what they said they were going to do. This was the plan, right? And what I loved about you in one of the conference calls, and it was one of those times where things weren't going as quickly as you had hoped they would go, right?
Yep, that's right.
And you made a very simple statement, but it is so accurate. Nobody ever said this was going to be smooth and easy. The plan is still there. We just got hit with some things that have, set us back. But, nobody ever said this was going to be a smooth as glass ride. This is going to be a bumpy ride, right?
Yeah, anytime you're trying to turn an organization around, whether it's, an Army infantry unit or a business, look, if it was easy, everybody would do it. And I think you have to expect, as a leader, I always tell people that if you want to be a leader and you want to come in and things go smoothly all the time, that's not what you get paid for. Leaders get paid to have, people come in, 20 times a day with, hey boss, I got a problem. Okay, let's talk about your problem. How are we going to fix it? Some of those problems are smaller things that need your attention. Some of them are much larger, strategic, kind of, company life or death type, decisions that have to get made. But nonetheless, that's what we get paid for as leaders.
So when you took over the company, just to go back in history, and we're going to look at the chart in a minute, and it's not a pretty chart. I'm going to make that real clear. It's definitely not a pretty chart, and there are a whole bunch of reverse splits and really nasty stuff in there that if you've been a long-term holder, you're not a very happy person, right? But the company itself, I don't think ever even broke even. Am I right in that with it?
No, that's correct. Generally in the history of the company, and it's been in its current, we'll just say it's in its current form since about 2009. It did do a reverse merger in 2015 when it became public. And then, really starting after 2015, it really kind of started getting into I'll call it this automated inspection business, not only in the rail, but also a little bit in the security business and some of that. But no, the company is always lost money. It's never broken even or made a profit. And I think obviously that by the time we got to when I was asked to join in 2020, the shareholders that had invested at least between 2015 and 2017 were, okay, we got to make a change here. I think that's very understandable.
I would say there are a lot of companies that still don't get it. I mean, they've been doing it for, the same way for 10, 20 years. So, I mean, when you look at a chart, it's going from the upper left to the lower right for multiple years. And then you meet with these people and they're like, yeah, our stock is a great valuation right now. And it's an opportunity. And I just have to look at that and say, well, if it's been doing this for the last 10 years, what is going to change that trajectory? I mean, how do we change that? Because if I put my money there and that's what it does for the next 10 years, I'm not going to be very happy. And that's a pretty established trend, right?
It sure is. And I think, we kind of start, kind of culturally or from a mindset standpoint in that some of the folks and a number of folks are not here anymore that were here when I first got here. They quite frankly kind of become accustomed to, it's just, we lose money every year. That's what happens. I'm like, no, that's over. We are not going to accept that. Now that being said, 2021 for us is the first time I have ever run an organization that has lost money, and it's not acceptable. It's absolutely not acceptable. And I think we're on a good pathway, to change that trend. We can talk more about that, but
you got really close, or did you break even the one quarter, or did you got really close to break even for one quarter, right?
Yeah, as we're landing for Q4 of 2021, we were like just a smidgen off breaking even. Yeah.
Okay. And then it was the next quarter, I think, that I could hear the frustration in your voice because you were on the right path, and then some speed bumps hit, and I could hear it. I mean, I could hear, and that's when you said, look, nobody said it was going to be smooth, but at the same time, I could hear that you were not happy, right?
Yeah, we finished 2020. That was, when I first got here, we just about broke even that quarter. You're right. And then the following quarter, we kind of took it, and no, I was very unhappy.
But I love that, right? See, because you care. That's what I feel from you is that you care, and you're not the kind of guy that wants to lose, right? You didn't come here to just status quo. You came here to make a difference. That's what I believe, right? And I think you're on the path to doing that. And Wall Street, look, they have their own little thing going on, but right now, the whole space, the small cap space, and we're going to get into how many shares do you have fully diluted outstanding?
Yeah, I think we're at about 6,500 to 7,000 million. 6.5 to 7 million shares all out there fully diluted. Yeah.
6.5 to 7 million shares outstanding.
Yeah.
Okay. All right. And we'll go over the technicals a little bit later, but because we'll do that right at the end. But what I really want to get into is what it is exactly you guys are providing, right? So I want everybody to see these this right here, right? This big shed, it looks like, right? But it's actually got a bunch of optical components underneath the cars, around the cars, lights, right? This thing is pretty cool.
This is pretty cool, and it's kind of what kind of initially attracted me to the company. So basically what we do is we're basically automating the inspection of a train while it's moving at full speed. So basically imagine you take a large shed or car wash on top of a set of railroad tracks. Inside that, on the top, sides, and bottoms, you got a set of lights, cameras, lasers, and other speed sensors and other things. And basically, the train comes flying through at full speed. And basically, each individual rail car, with our kind of our base model, we can see 20 to 25 individual mechanical inspection points on each rail car, top, bottom, and sides. And then with one of our more advanced portals that we've delivered into one of our customers, you can see just about 90 individual mechanical inspection points, everything from bolts on the sides of the end caps, the axles up underneath, open doors, open hatches, all this sort of stuff. So then what happens is all that data is acquired. It's pulled in across our IT, and then it's stored, processed, and analyzed with a set of proprietary software, which is all in-house for us. We then apply artificial intelligence algorithms to it. And once the train has completely passed through the portal, in about 3 to 5 minutes, a full report is provided to the customer inside our user interface called Centrico, and they can immediately see any of the defects that have been identified on that car, and they can go in and kind of hone in on that particular car to go further inspect it with their own mechanical car inspectors. So again, these trains are going at 60, 70 miles an hour. The clarity of images, and you can see it on our website, is astounding. So that same technology, or that same kind of approach, is similar to what we're applying now into inspecting trucks, and is similar to what I was talking to you earlier before we came onto the show here, that earlier this year I had pitched to one of the major commercial airlines here in the United States. Very, very interested in doing aircraft inspections. Again, concept aircraft lands on a runway, goes through a portal that's on one of the taxiways. By the time it hits the gate, a full visual inspection has been done, and the operations team already knows if they got to swap an aircraft out, do something to it, or divert their craft. So that's developmental in the aircraft inspection, but it's kind of a taste of what this technology has the capability to do.
Which, if I'm to sit here and think about what the TAM is on this, it's massive, right? And you have to make sure that we're clear on this. It's your patented, your proprietary technology, right?
Yeah. So basically, we currently run and hold approximately 17 patents right now that we're actively managing. We've got another 2 or 3 that are in pending status right now, along with quite a bit of intellectual property. But our solution, it's not a hardware solution. We should not be thought of as a hardware company. It's an overall solution that combines hardware sensors that acquire data, along with software, IT, and then artificial intelligence. It's all brought together into a single solution. It's presented to the customer in a user interface. But again, that holistic solution, is proprietary. And some of the things that are in are really cutting edge, and we're constantly improving it right now.
Right. So, I mean, look, it's funny because everybody, you don't have software solutions if you don't have hardware. So, the hardware is part of the deal, and the hardware is going to get better and smarter, probably, right? And cheaper. That's usually the way it works.
That's right.
But you can't have the software solution without the hardware. And, I look at, you guys post a lot of, actually you've been posting the builds on one of these things, and it's fascinating to watch over time, right? I mean, there's a lot that goes into these things. And the fact that this thing is traveling at 70 miles an hour, and you're able to identify these points that are critical, right?
Yes.
I mean, how would this typically be done prior to you? How is this done?
Well, no, that's a great question. So the rail industry, the Class 1 railroads, and really the entire rail industry, much like aircraft and the commercial aircraft business, is regulated by the FAA for good reason, for safety and all that sort of stuff. The Federal Rail Administration, along with the American Association of Railroads, and then in Canada, their counterpart is Transport Canada. They are effectively, if you will, the FAA for the rail industry, the FRA. So they have a set of rules and regulations, and for good reason, that have been in place for many, many, many years, where any train that departs either a train station or a place where they're doing switch yard, where they're switching the cars up and forming new cars, it requires a physical inspection. And those physical inspections are done by railroad mechanical car inspectors. It's done by hand visually, and you'll see guys. These are hardcore, blue collar guys. We've got a couple here on our staff, and these guys are out, in the rail yards, rain, sleet, sun and snow, walking up and down the sides of the cars, inspecting all the various different inspection points required by the FRA checklists. That's required by the FRA as these trains exit the train stations. The railroads of themselves, when these rail trains enter the rail yards, they do their own inspection because they have a requirement, obviously, to maintain the cars, as well as cut them out, get them onto the right tracks to form them up for the next piece. So they do an inspection coming in, and they do an inspection coming out. It's all done by hand right now by mechanical car inspectors. What our system is basically doing is basically automating that process. And the first step of that is we can basically take those mechanical car inspectors, they're out in that tough environment, and put them behind a workstation where they can now visually see the same thing they were looking at before, only now they can actually see it in much nicer conditions. What they can actually see is actually much more
detailed,
visible and detailed. And we've now had several of our Class 1 customers with those mechanical car inspectors using that tool. They've actually been able to speed that process up, make it more accurate, increase the safety and the velocity, and really make good use of it. Then you start adding artificial intelligence to it, where you can automate that inspection, where either they can, so right now the regulations still require a human validation of that. But again, it makes it faster, so where, now the report says, hey, you need to go look at car such and such. It's got a scored axle. They can go right to it. Boom. Yep, that's exactly correct. They hit the button. The report automatically goes to their mechanical team, and they pull that car out for immediate maintenance. It's much faster.
Efficiency, right? I mean, you're saving these guys a ton of money. It's much more efficient. It's much more, like I said, well, like you said, a much clearer picture, right? You're gonna get the information a lot faster, and it's pinpointing it. Like you said, it comes to the yard. You say, okay, look, you need to look at this spot on this car. That's right. It, right?
So for the railroads, really, first and foremost, what we're trying to help our railroad customers with is safety. Number one, we're trying to help with safety. Derailing cars or having accidents. Outside of that. That's extremely, obviously, bad from a safety standpoint, and a tremendous loss of money for the railroads. Secondarily, there's two other metrics that kind of feed into any Class 1 railroad's operating ratio, which is the real key metric that investors look at with these publicly traded railroads. It's operating ratio, and that breaks down into velocity and dwell time. Velocity is a measurement where the railroads measure basically on average how fast each individual rail car over a period of time transits down their railroads. It kind of is associated with this precision railroading. The second one is dwell time. It's basically a measurement of how long each rail car is not moving for whatever reason, whether it's maintenance or what have you. So those two metrics, along with safety, is really what we're trying to help the rails with: safety, dwell time, and velocity. All with the idea of improving their operating ratios.
Which is apparently being pretty effective, because I think in the last 2 weeks, you just announced two new contracts, right? One pretty much on each side of the country. We got one down by the border there, and then we got one up in Canada, right?
Yeah, that's right. We've had again, some of these are repeat customers, which is helpful, because when I first got here, I was concerned that we needed to kind of, re-earn our place with our current customers. So one of them is with CSX. CSX is based headquartered here out of Jacksonville, but terrific customer of ours. They've ordered additional equipment. This coming year, we'll be installing that. Kansas City Southern, another terrific railroad that moves high amounts of freight from Mexico into the United States and back and forth. has ordered additional equipment. And then we've got Toronto Transit Authority, a little smaller job for us. That's a new customer, has engaged us, and we're in the process right now of installing some inspection systems for that. And then we've got some other contracts that are about to be struck that kind of feeds into that guidance, that preliminary guidance that we issued here this morning. So again, all the fruits of this hard kind of hard won kind of turnaround stuff is starting to bear fruit here now towards the end of this last year and now.
So actually, I want to bring that up real quick because you just let me pull this up real quick because the preliminary guidance that you guys just put out this morning, which I thought was pretty darn impressive. But right now, look, Wall Street and the small cap space has been getting pounded for the last 8 months. And, it really doesn't seem, and this is not a company specific thing, just so everybody knows, this is, you can put out good news right now and it just doesn't seem to matter, right? I mean, you get a little lift and then it pulls back, and that really has a lot to do with the sector. It's not, I don't think, company specific. As a matter of fact, I know it's not company specific. So let me pull this up because I thought that was a pretty darn good, pretty impressive. When you think about, we're not even talking about the fact that there was this whole like COVID thing, right?
or the supply, that along with
or the supply chain.
It's a real thing. So it really is, yeah.
I mean, to take over as the CEO of a company at this particular point in time, probably, not the best timing, right? I mean, a little challenging, but you like a challenge, so this is good, actually.
I've told my wife I'm kind of just used to it, so it's just like it doesn't mean that, yeah. But no, I think realistically, especially I think last year early on, we had issued some guidance. And, at the time, it looked like COVID was kind of getting behind us. Supply chain at that point was pretty good. And we had several customers that we were in full contract negotiations to hit a pretty high number. Unfortunately, COVID resurged again. Supply chain issues really got tightened down. And that caused, a couple of our Class 1 rail customers to kind of retract what they were doing and kind of hunker down. And unfortunately that caused me to have to, again, in full transparency, we pulled that guidance down last year to a number that was about 8 or 9 million. That was what we had contractual backlog. I wanted to be honest and transparent with our shareholders and potential shareholders. And so this year, as we're looking now, as I contemplate giving guidance, again, I do learn lessons, right? What I did was say, okay, guys, we're going to be very, very, very conservative. So when I put a number out this time, dang it, we're going to hit that number. So that's 16.5, $18 million. That is in contract, in the bag. And so I feel very confident about that, where we're at. And obviously that's still not good enough. We've got a plan actually internally to, because we've got a number of really good commercial opportunities beyond that, to try and go beyond that. But we want to be conservative, and as transparent as we can to, shareholders and potential shareholders.
So, it's great that you say that, because I will just tell you, because I've been in this game for a long time, and look, there are guys that I like and that I think they are fantastic at selling the sizzle. They are really, really good at telling a good story and getting you excited. But there's a difference between. Hold on one second. Okay, there's a difference between telling a good story and being able to execute, right? I've never had anybody tell me, hey, we're a really crappy company. We're never going to make money. We're going to dilute the hell out of you until your eyes bleed. And, 10 years from now, if we're still around, maybe they'll put in a new management team and get into a whole nother industry, and maybe we'll make money. Nobody ever says that, right? It's always a story that's like very compelling. But, and there's guys that like to overpromise and underdeliver. And I think you can maybe do that in Wall Street or in the market. I think maybe you could do that twice in a row. But if you start doing it 3, 4, 5 times in a row, you lose all credibility, right? So the conservative guys, the guys that underpromise and overdeliver, are the guys that I love, right? Yeah. Those are the guys that they look, some call it sandbagging, call it whatever you want to call it, but it's the smart way to approach the market, right? Because you're going to be held to, well, you said you were going to do this and you didn't do it, right? Regardless of whether COVID came and, there was the supply chain issues.
Yeah.
That's what they're going to remember, right? Because that's all they focus on. But a lot of times, not knowing what's happening internally with the company or the challenges, or not recognizing that things, sometimes don't always go perfectly, creates opportunity for more astute investors, I think, right?
Yeah.
So I think that's what we have here is an incredible opportunity so to be clear, the hardware, you sell one of these units, right?
Yeah.
The hardware, all that, the margins on that stuff, I would imagine, are not that great, right?
Yeah. So what we're doing right now, we're basically, look, we're currently right now, we're selling the solution, kind of I'll call it a one-time sale, right? And then there's a recurring, kind of maintenance service licensing contract that kind of goes with that. And often what we're seeing, customers, they'll typically be in that for a number of years. So we're about 75 to 80%, I'll say one-time revenue right now, and about 20 to 25% recurring revenue. We're kind of trying to come up with all kinds of clever ways to increase that.
Now that's on the unit itself, right?
Yeah.
But what about the software component?
Yeah. So what we do is, again, we're kind of selling a unit. Again, within that, it's got the recurring component of that is we'll have kind of, I'll call it a service and maintenance contract, and then there's really a software and artificial intelligence kind of licensing and maintenance component to it. So it's almost a lot of times my commercial guys, they want to, well, this is the maintenance part of it, and this is the license. I'm like, look, they're getting an operating license. They get an operating license to operate the hardware, software, the IT, the AI. It's really kind of one wrapped in thing, because you got to have all of that to kind of effectively operate that, and you need us to help maintain it as you go forward with that, if that makes sense.
Okay, and then I'm sure you're not done developing, right? I mean, you're going to be continuing to develop new.
Absolutely. So we are actually have a couple of we'll call it R&D projects in progress right now, and so no, we are absolutely not done. So yeah, we got a decent, pretty good product that's out there now. We've made the product that's out in the field even better over the last year, but we are definitely introducing some upgrades and additional features to our systems on a go-forward basis, for sure.
So what is the margin profile as we sit today? Where are we at around margins?
So if I take on a normalized basis, and right now the numbers look not so good if you look at them publicly, but we had recently, when I got here, we were kind of accounting, I would say, in an R&D fashion. So a lot of the costs that were associated with deploying equipment out into the field were really being accounted for below the line in kind of that R&D bucket. What I asked my CFO to do, and he was gracious enough to accommodate me on it, was look, we're getting more into production mode right now. We want to expand this thing. We got to start accounting for this stuff more like a mature company. So that is, obviously, you've got your direct costs, but then you got really kind of your overhead costs, and those really should be reflected above the line. And then, yes, we're going to do R&D, and you're going to see that below the line, kind of in that G&A. But in order for us to accurately understand how much it costs to do things, I asked him to start pushing those or allocating those costs above the line. So what you see is our gross margin in our numbers looks, dramatically depressed right now. But as we get in towards the last part of this year, it started to come up. And as you go into the next year, you're going to start seeing that normalizing. So what we should see is a gross margin, that's at least 35%. More likely should get up to 50% as we progress through the year and into next. And then at the net margin, a true net margin, we're probably hitting at least 12 to 18% at that net margin. And then a company at our size right now, to be honest, Tim, it's all about cash.
Right.
So that cash metric for us, in my mind, is extremely important. Quite frankly, it's more important than either the gross margin or the net margin for us right now.
Okay. So speaking of cash, how are you sitting on cash?
Yeah, cash right now, we're pretty good. The preliminary numbers, we're ending just shy of about $1 million, $800,000 to $900,000 in cash. Now, I would tell you that's where we spent actually a lot of our cash towards the end of the year to start buying for the next set of projects. Today, as we're sitting right this moment, we're sitting about 1.3 to 1.4 million in cash. And we've got some pretty large we're expecting some pretty large slugs of cash to come in from these new jobs that we just struck. So from a cash perspective right now, we're in a good situation. That being said, we've got some large orders coming up. And the way our working capital profile has been in the past, typically we would wait until we had a signed contract to start ordering, and procuring. Because the supply chain has slowed down so much, in order to keep up with that, what that means now is that we've got to start spending cash ahead of signed contracts. Obviously, we got to do it at a very, very calculated risk, if you will. But that's causing us to have to have more working capital up front before we actually start, taking in these milestone payments. So that's something that I think we have a good plan to manage that. And it's a similar profile to what we had in the last company that I'm in.
So what I think is kind of a good thing about the whole COVID and the supply chain issue is that if you're a CEO that manufactures anything, and you're reliant upon a sole supplier out of China or wherever,
It's bad.
You probably have put yourself in a bad position. So, if you haven't, as a CEO, said, maybe we should, pull, I'm not saying pull everything out of China, but maybe we should have some stuff right here in the good old USA, right?
Yeah, and that's a great point. And I came to that conclusion with my team, and I came to that conclusion last year. And so we did exactly that. We had a lot of overseas vendors. Quite frankly, we got burned last year by a couple of them. And so we've moved most of our procurement has been moved back to sources from the United States. A lot of the, because we buy some stuff commercially off the shelf, but then a lot of our stuff is also bespoke, manufactured for us. And a lot of that had been done overseas. All that has been pulled back to the United States. And in fact, a lot of it's actually been pulled back here to northern Florida and southern Georgia, where it's close enough that, me and my guys can go show up at the front door, knock on the door and say, hey, show me my stuff. Right? But having those relationships with those, those American, vendors and manufacturers, a lot of whom are also small like us, it's kind of cool. It's we're making stuff in America and we're deploying it in the United States. So it's, as a former Army officer, kind of makes me happy, right?
Yeah, exactly. I'll tell you right now, as bad as this whole COVID thing is, there are a lot of positives. I'm an optimistic guy by nature. I just try to look at the positive side of things. And a lot of positives have come out of COVID. This right here, what we're doing right now, right? Zoom And look, you have a much more efficient sales force, right? Because they don't have to hop on a plane. And I'm not saying you abandon going and seeing a customer in person, but you can certainly get 5 meetings done in a day, where it used to be, you're going to go get 1 meeting done in 2 days because you got to fly. I mean, efficiency, I think, is key. And I think we're getting a lot more efficient in a lot of ways in business. And then I think recognizing the fact that, yes, you know what, maybe we're not the cheapest place to manufacture things in the world, but boy, when you can't get that $150 chip from China and you got an $80,000 truck sitting in the parking lot that you can't sell because you don't have that $150 chip, maybe you need to rethink some strategy here, right?
Yeah, I find with a lot of our, look, there's we've had to spend a lot of extra time, and it's been worth it. It's a good lesson learned to have, one, develop a relationship with your suppliers, not just, hey, give me my stuff. You got to have a relationship with your suppliers, and likewise, you got to understand where your suppliers are in their business. Quite frankly, it's almost as important as your own business to make sure that, hey, when they say they're going to deliver something, you're not just taking their word for it. You understand what's going on in their business, and you're going to get it, because we're making commitments to our customers that we're going to get this done. And I think lots of businesses like myself are probably finding that to be true.
Yeah, and not only that, but you don't have to worry about them stealing your tech.
No, we don't. Yes, that's a good point. Yeah.
All right, so let me just go through these. So you, for your preliminary numbers, just because in case I didn't highlight that. All right, do a previously issued total revenue guidance of let's see, 8 million.
Yeah.
And expects.
We're going to finish up 2021 at around $8 million revenue, and that last quarter of this last year, we're real close to break even, which is helpful. This coming year, we're giving preliminary guidance, 16.5 to $18 million top line revenue. I will tell you, and I want to be very clear, that if you're looking at my company on a quarter-to-quarter basis, you should not do that. Okay, I'm telling you right now, our Q1, because of where we're at in procurement and getting in new jobs, that first quarter is going to look like crap. So don't let that scare you off. All right, but when we come into Q2 and Q3, you're gonna really see that money train start coming in, where we start to hit that 16.5 to 18 million. So just want to be real clear, we are still lumpy.
Is it typically a seasonal business for you? I mean, or no?
It's not really a seasonal business per se. Like, in the wintertime we make lots of money, or vice versa. It's just been the cycle that we've been in. I will say that the railroads, which has been our primary customer, the Class 1 railroads, look, they have plans. They are very deliberate about how they plan their yearly budgets. And if you're not in their yearly budget, by about October of the previous year, you're going to have to fight your way to get into that budget the following year. So maybe a little bit, yes, cyclical, but I don't think that that's something that we're always going to see that cycle. We're trying to do some other things to get out of that cycle. But over the last couple of years for us, we have typically seen Q1, Q2 be not so good. And then as Q3, Q4 come in, it just happens that that's when, we've started making all of our revenue. So.
This is for any type of train. I mean, are you looking for, is it primarily for, freight transport right now where these are being used, or is it for passenger trains? Or, I'm just curious.
Yeah, no, for us, we have primarily been servicing the freight rail companies out of the Class 1s. However, we have had customers we've serviced and provided equipment for Chicago Metro, which is transit railroads into Los Angeles. We're currently fielding inquiries from New York City Transit, as well as Washington DC Metro, and then we've got some larger transit railroads there. But so to answer your question is we can basically any moving train, the technology absolutely applies to it, whether it's a class one, short line, transit, passenger rail, it absolutely applies. And it absolutely applies in anything else that's moving. If it's a truck or an automobile, we do have a logistics or trucking customer. They've asked me not to use their name, so I won't use them, but they're a large retail chain that operates trucks. I got to be careful, Tim, don't get me in trouble.
I understand.
And then we've had inquiries, like I told you, from one very, very large commercial airline company that's kind of interested in looking at it. So anything that moves, we can scan it. What's important is the data that comes from the imagery scans and what you do and how you process that data.
But the way I look at it, maybe I'm all wet, but insurance companies, insurers, I would think with a product like this, why wouldn't they almost mandate that this gets used, right? I mean, and then I'm thinking about passengers on, like, I don't know if you're aware, but we're supposedly close to a bullet train from Vegas to LA. I don't know how accurate that is, but they've been talking about it for 10 years.
Yeah.
But, these high-speed trains, I'm thinking to myself, probably pretty important to make sure these things are safe.
So obviously the FRA has real strict rules around that sort of thing. So I think all of us should feel pretty safe taking a train. That being said, obviously the industry, and I think even the regulators, such as the FRA, know that doing automated and technical inspections is the wave of the future to make things safer, and more reliable for sure.
Is real time, right? I mean, it's real time.
And I think one of the advantages of, when you're inspecting something physically with those mechanical car inspectors, obviously the train has to be stopped. The advantage of scanning these trains or anything else that's moving is now you're inspecting the train or the vehicle while it's in full operation. You're getting the full effects of the heat, full effects of any wear and tear, all those sorts of things. You're seeing what those things look like real time, kind of like what they do. I enjoy watching F1 Formula One racing. Those race cars have sensors all over them, and they're constantly looking at those cars, how they're responding real time on the track at full speed, and they make adjustments to them, or they tell them, hey buddy, bring your car in, it's about to
pull it into the pit, right? So
Exactly.
I mean, and it's kind of the same. I mean, if the train's cruising and you see some piece of metal that's hanging off that probably shouldn't be hanging off,
That's right.
I mean, they could literally. I mean, could they contact the train right then and there and say, hey, you need to shut it, you need to slow it down or shut it down?
Absolutely. I'm not a lifelong railroader, but I have learned enough in the last 18 months to be dangerous. All these trains have constant communications, and there are all sorts of different ways that the railroads, depending on the type that they're operating, can instantly communicate with an operator or vice versa. To respond to some sort of a situation that they have on their train.
So now you're talking about protecting, or avoiding loss of life. I mean, to me, there's a lot of components here this is serious stuff, right? And this is important. And why wouldn't you do this? And why wouldn't every insurance company say you're gonna do this, right?
Yeah, I think again, the whole idea of doing this is. It's relatively new. I think the industry in general is still, again, you can talk about what you can do with the technology, but then, as you said before, you actually have to execute, right, and prove it, right, and prove it out through, a good, systemic period of actually collecting data, and then, letting, the regulators look at that data and determine, okay, this tool is reliable enough that we can rely upon it to mandate.
It's AI, so it's getting smarter,
right,
all the time, right?
It is, and I think artificial. I mean, look, our phones. This phone has artificial intelligence in it. It looks at my face and it wants to talk to me, right? It's artificial intelligence, right? It's a different kind of artificial intelligence because, again, what we're doing is more kind of, I would say, machine vision, fast moving object, artificial intelligence, a little bit different from like, say, sifting data for a bank or, doing other kind of pattern recognition. So it does require, I'll say, some subject matter expertise around, and that's what we've kind of learned the hard way over the last 18 months. And that's why I've added a couple of, very experienced railroad mechanical car inspectors. We've also got some railroad safety officer experience that consults with the company, because you got to have that expertise matched with kind of your technical software guys to actually make it do what it really needs to do to replace or at least augment what a human would actually do.
Smart. Okay. I think we've done a pretty damn good job of telling the story here. Unless there's something that you feel as though I have missed. And if I did, tell me now. Let's hit it.
No, I don't. No, I don't think so. Look, we're a young and now small but very, very hungry company right now. The team that has been assembled here over the last year is absolutely positively not satisfied of being a $10 to $20 million company. It's not why we came. We're absolutely positively determined to, and we've got the potential to do much better things. And we think we're just kind of turning that track right now this year, and you're going to see that throughout the entire year. So
this is what I want to do. I want to go over the chart really quickly. It's not pretty. I said that earlier. No. You said 2015 was when they did the reverse, right? 2015.
Yes.
So they did a 1 for 200 in 2015. Then it was a 135 in 2017. Then it was a 1 for 14 in 2020, right? That is a painful ride, right? I don't care who you are as an investor, that is painful. What's interesting though is, you really can't use this long-term. Well, I guess you can use the long-term trend but going back to 2020, I mean, the slope of this thing has been going from the upper left to the lower right. So what's different though, or what has changed, and that would be, when did you come into
Yeah, I joined in September 2021. Yeah.
September of 2021.
Yeah. I'm sorry, 2020.
2020, right. Okay, right. So 2020, let's see, right about there. And I don't know, something weird is happening with the chart. All of a sudden, it started to do this kind of...
Like the first half, I really don't like the second half, but that's okay. We can work on that.
So listen, one thing about charts and stocks is they don't just go straight up. They stair step. That's what they do. They stair step, right? And once you take out a long-term trend, that is the beginning of a new trend. And when a long-term trend starts, just like that long-term trend to the downside lasted for many years, when you make that long-term trend break, that can also last for many years, right? So right now you're at the very beginning stages of a break, and it just happens to coincide with the new leadership team that has come in. And I don't know if they haven't recognized from this interview that you're a no-nonsense kind of guy that has a clear plan, has what I think is an amazing product, and has a massive opportunity of a market. I mean, I don't know. I don't know what else I could possibly do to make that picture any clearer.
Yeah. Well, everybody gets to, it's a voluntary outfit, right? Put your money where you want. So.
Right. I mean, look, I'm not telling anybody to buy this. Am I a shareholder? I am. Do I plan on continuing to be a shareholder? I do. I view this as a long-term investment. I think that, yeah, you're going to probably get these little I'm thinking that this company's, I'm thinking this company is a steal down here. And at some point, when it does become more validated and you do spread out to different industries, I see you guys being taken out. That's what I see. I think somebody's going to try and gobble you up. Maybe I'm wrong.
To your point, Tim, I think right now, look, I'm a shareholder as well. I've absolutely bought some of my own stock. And when I get the opportunity to do it again, I'm going to do it again. So I'm in there with everybody else. And, look, I think the good thing is we've had some shareholders. We have a group of shareholders. They've been with us kind of long term. And it's been helpful where they said, look, Chuck, we want you to build a valuable company. Try not to focus on the immediate, short-term value of the stock. Think longer term, build real value. It will come. And so that, at least right, that's where my focus has been, is just to build a good, valuable organization, obviously for the shareholders, and at the same time, build a team that enjoys coming to work, and and they're feeding their families, and that's kind of where my focus is right now.
Well, I'll tell you what. You probably have learned that you probably got to have some thick skin to be the CEO of a publicly traded company, right? Yeah. But I would suggest that probably is nothing compared to your military history. You've been through some battles, right?
Yeah, a number of them, and some. Yeah, there are days when I think I have a hard day at work, and I get in my car and while I'm driving home, and I'm like, well, at least nobody got killed today. It'll be fine. So,
right.
Yeah.
You faced a lot worse. And I don't know, man. To me, like I said, you have leader, it just emanates from you. So I am very impressed with the story. I love the story, and I can't wait until, all the pieces start dropping, because I think this is going to be one hell of a fun ride. I don't think there's anything else. What I would like to do, let's put this out. Let's put this on people's radar. And, look, and that's really all I'm suggesting here, is put the company on your radar, watch, listen to the conference calls and see how they execute. And let's see where this thing goes. But I think this is a fantastic story. So I want to thank you very much for taking the time to do the interview. I'm gonna, unless you've got anything you want to say, I'm gonna stop recording and
thank you very much for the opportunity to do the interview with you. I've enjoyed the conversation and talking about the company, and thanks. Appreciate it.
Hey, what's happening, all you Wall Street stock market junkies? Thank you so much for tuning in for another CEO interview here at Alpha Wolf Trading. This time it was with Chuck Ferry from DUOT Technologies, and the ticker symbol on that is DUOT, as in Tom. Now I have to tell you, this one, I love all the interviews I do, but Chuck today was he's inspirational to me. I can feel the leadership that he represents. It just emanates from the guy. I hope you enjoyed today's video, and if you did, please do us a favor. Why not give us a like? And how about giving us a share? While you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.